Okay, welcome back. I just want to go through the balance sheet now for the 2002 published accounts question, for which you already have the profit and loss account done. So, for a start, the title, as is normal, balance sheet of Thomson PLC as at the 31st of the 12th, 01, or on the 31st of the 12th. Then this is where the first difference, I suppose, appears. When we're doing our fixed assets, we don't do the traditional three columns with the cost, depreciation, and net book value. We just put in the net book value figure. So, and also we have three items we put under the heading of fixed assets. They'd be intangible assets, tangible assets, and financial assets. So, the first one, intangible assets. Okay, and intangible assets, traditionally, I suppose the two main ones you see in this is goodwill and patents. Now, for the published accounts questions, it tends to be always patents. In other questions, incomplete records, it tends to be goodwill. But intangible assets, those are two examples of them anyway. In this case, it is patents, and we see here you have patent at the 1st of the 1st, 2001, 168,000. That's the value of it, the net book value of it at the start of this year. And it says that the patent was acquired down here for 240,000. It's being amortized over 10 years in equal installments, means we're writing off 24,000 each year. If we divide that by 10, 24,000. So if at the start of the year it was 168, because it's already gone down several times since it was first acquired, then by the end of the year it should go down by another 24,000. So 168 minus the 24 is 144. Okay, so 144, you don't have to name what the intangible asset is or anything, just the figure out here. And as I say, one column for this particular thing. We'll have three columns as traditionally, but we won't have the cost, depreciation, net book value. So that's intangible assets. Next one, tangible assets. And under tangible assets, all the usual fixed assets that you'd have. So your land and buildings, vehicles, machinery, any of that type of thing would be tangible assets. In this case, I think it's quite straightforward. There was only buildings in this one, was there? Let's just have a look. During the year, land, which had cost, that was sold at the end of the year, revalues building at that company. We should. Okay, so yeah, it's only buildings. So it says here, up here as well, it has building cost, accumulated depreciation, but since it has revalued the building at the end of the year, 750, it's quite straightforward. The depreciation is set back to zero. There's no land because you've sold it off, so it's just 750 in here for buildings. But had there been vehicles or something like that, you'd add that to this amount and it'd be the total that will go in there, less any depreciation that had built up as well. Okay, and the last one then is going to be financial assets. And under financial assets, these are any of your investments ordinarily. And in this question, there's only one lot of investments, and that's the 300,000 here, fixed asset investments. So 300,000. And I added this up earlier, but let's see what. 1,194,000. Okay, and then the next thing is the usual current assets. And there's just one unusual thing about the current assets as well that we'll see in a moment. We start with stock. Okay, stock, where is it? Stock, or closing stock here if you like, at 31st of 12, 2001, 690,000, straightforward. Now you can put this in either the middle column or the first column. I guess we'll go for the first column. 690,000 for the stock. Then the next thing we put in is debtors. Now this is the, I suppose, the unusual one to a certain extent. Now you don't, again, like the profit and loss account, you don't show any workings on the face of the accounts. You could get penalized for that. Do all your workings separately somewhere else on the page. And it doesn't have to be too tidy. As long as you label it, whoever is examining it will have to go and find your workings. They'll have to look at everything you've written in the exam, but just make sure it's somewhere close to the question anyway, that they can find it, that they don't miss it. So the next thing is what were we saying? The debtors. Where are we up here? Debtors and creditors, 139,241. But of course, because the debtors balance should be on the debit side, we know it's the 139 here. Now, as I say, you don't do the workings here ordinarily. I'm just putting it in to show you where I got these figures from. So 139,000 was the debtors figure there. And what is almost in all of these questions, there should be, where did I have a look? Maybe there isn't. Oh yes, there is. Provision for bad debts here, 23,000. So your provision for bad debts, you always subtract. Minus 23,000, provision for bad debts. Giving us a total of 116,000. Okay, now I suppose another unusual thing to note. So remember always to subtract the provision for bad debts. But also in the debtors here, even though like we normally think of our debtors as just those people who owe us money because they bought stock off us, whatever it is we traditionally sell. And then normally if we have things like investment interest due to us, owed to us, we normally put that in separately. But in this question, if there is investment interest owed to us ever, we take it as we include it with our debtors. We take it that is, they're just another debtor of ours, another person who owes us money, so we include it in here as well. Now in this particular question there was no investment interest due. They didn't talk about investment interest here, so we don't need to worry about adding it in here, but watch out for it in future questions. Okay, next one is going to be bank, or cash at bank if you like, but bank will do fine. Is that 179? I believe it is. 179, and I took the total earlier as well. 1 second now. 985,000 if we total those up. Okay, so next thing, creditors. Oh, another room here. Okay, amounts falling due within 1 year. Okay, so the first thing we're going to have is trade creditors. Now, this is, I suppose, the difference between the current assets and the current liabilities, if you like. In the current assets, our debtors, even if we have other debtors outside of trade debtors, we include them all in debtors. Whereas down here, we have our trade creditors, and the next thing we're going to have is our other creditors all bundled in together. So trade creditors for a start is going to be, okay, let's go over here and see. 241 it looks like. Okay, so 241,000. Okay. Other creditors, okay. Now again, I wouldn't put the workings here ordinarily. I'm just putting it in so that you can see where the figure came from. And the other creditors are made up of other people that you owe money to at the end of the year, and usually there are specific ones that we ordinarily include here, and they are down here. Things like the director's remuneration, that's that 80,000. The auditor's remuneration, 9,000. We keep the taxation separate, and we put any debenture interest due in with the other creditors as well. So if we had, so we'd say director's remuneration, I'm just going to put this in here, 80,000 plus, is it 9,000 I said for the, let me just see, auditors, yeah, 9,000. Okay, and then let's see what our debenture interest due is. Where's our interest due? 8% debentures, 400,000. So that's what, is that 32,000 we ought to be paying? And let me see now, debenture interest paid 12,000. So here we go again. 8% of 400,000 is 32,000. So that's what you should be paying for the year. But debenture interest paid, you've already paid 12,000. So 32 minus 12 is 20 that you owe. That's the debenture interest that you owe. So that again also goes into this other creditors figure. And adding them all together, what's that? 109. 109,000. Okay. Next thing is your taxation. So even though it's something that you owed, you don't include it with the other creditors. And there is, I suppose, two things that we include in the taxation ordinarily. Let me see. There's your corporation tax. That's your tax on profits, 170,000. And then also, yeah, here it is, VAT, 82,000. Okay, your value added tax. So what did I say? 100 and where is it? 170,000. That's 82,000. And again, don't put the workings in here ordinarily. This is just for your benefit. 152,000. Okay, 252,000. Excuse me. And then what's the last thing again? Dividends. Okay, proposed dividends. The dividends that you owe that you haven't paid already, but you propose to pay. Dividends. Journey back. Proposed dividends. And in this question, what was the proposed dividends? No. Well, do you know what? I'll fill it in a moment. I have the totals, but I wouldn't be going working it out all over again. If you've already done it from the profit and loss account, you should just take that figure from the profit and loss account and put it in here. I have the total though. It is 633,500. Okay. We subtract that from our current assets and we get a figure of 351,500. Okay, and that's your net current assets. Oops, is it net? Assets. Okay, and that net current assets figure then gets added onto this fixed assets figure, and that's 1,500. That is your total assets less current liabilities. Okay. Okay, just pause that for a second so that I could fill in this, or I could figure out this proposed dividends figure. So just take that straight from your profit and loss anyway. So last bit of it then, in the finance by section we have, you don't have to put in the finance by as such, you put in the creditors. Amounts falling due after... you see more after more than 1 year in some texts and just after 1 year in other texts. I'm going to leave it as after 1 year, but you will see it as after more than 1 year more often than not. And in this case, this will be your debentures, whatever they are. Where are they? 8% debentures, 2005-2006. 8% debentures. And that was 8% debentures, 400,000. Okay, then your capital and reserves. Okay, and your capital reserves, they get a bit iffy about this if you do this in the wrong order. So it's your shares first, then your reserves, things like revaluation reserve, and then lastly your profit and loss. Okay, so your shares first, and you don't have to, unlike other questions, you don't have to do the authorized and issued, just your issued share capital, and we call it actually called up share capital. And I suppose the unusual thing about this is, well, you don't even put in the preference and the ordinary shares separately. Here you see 400,000 and 300,000. You put them in as a total figure of 700,000. 4 and the 3 is 700,000. So 700,000. Okay. And then it's the revaluation reserve. And you know, that's calculated in the normal way, so I'm not going to do that again here just to save time. I'm going to pause and work it out. Okay, I just paused there and worked this out. 112 is what it came to, and I just put in the figures. Again, don't put these in when you're actually answering the question. 50,000 plus 48 plus 14 are the workings for it. You can, as I say, you've done that enough times, you can look at it yourself. But by all means, ask me questions about it if you can't figure it out when you're doing the questions yourself. And lastly then, the profit and loss figure. and that's taken straight from your profit and loss account. In this case it was 333,500. Okay, total of the three of those is 1,145,500, and adding these together 1,545,500, and there we go, everything's balancing.